Minasan, konnichiwa, Zamurai Engineer desu. In this chapter, let us discuss subsidiary ledgers and special journals. So let's take a look. There are two lessons in this chapter. We have the nature and purpose of subsidiary ledger, and number two, the recording of transaction in special journal. Let us go immediately to the lesson 1. We have nature and purpose of subsidiary ledger. It is used to keep track of individual balances. Two common subsidiary ledgers are: number 1, accounts receivable, customers, and accounts payable, creditors. Subsidiary ledgers. So subsidiary is an offspring of a parent company, parent and child company. Child is the subsidiary. The child is a subsidiary of the parent company. Okay, so it's general ledger, and ledger we are talking of posting, no? Ledger, account. It's account record. It's account. T account, no? Ledger. The control account balance must equal the composite balance of individual accounts in the related subsidiary ledger. So there is a balancing post in parent and subsidiary. Okay, so must equal the composite balance of the individual accounts in the related subsidiary. So general ledger is the one we are talking about here. Okay, so and also we'll talk about subsidiary ledger. Subsidiary ledgers, samples of account receivable and account payable ledgers. What are those? For the general ledger and subsidiary ledger, we have what? Cash, accounts receivable, accounts payable, common stock. So what are we talking here? The accounts receivable and accounts payable are the control accounts of our what? Customers, ABC, and creditors, XYZ. So we are talking of customers and creditors. Okay. So accounts receivable, subsidiary ledger. We have what? Aaron Corporation, Brandon Incorporated, Caron Corporation. So these are subsidiary. And then general ledger, we have what? Of the company, we have what? The total, we have 2,000 plus 2,000, we have 4,000. That is now the total balance. Subsidiary ledger is separate from the general ledger. Different, separate. So we have a different what? You can notice they are total. The general ledger is a total. Account receivable is a control account. Okay, account receivable. So you have to what? To keep track a record with subsidiary ledgers, and you have to keep track a record for what? General ledger. So general ledger and subsidiary ledger. You have to keep a file of those accounts. Okay, those accounts. So you have what? An account's name, Aaron Corporation. You have an account's name, Brandon Incorporated. And you have account name, Caron Corporation. So these are account names. While on your account, general ledger, accounts receivable is the one reflected. No? So Aaron account is a subsidiary of your accounts receivable ledger. So that's how it shows in our accounting record. Subsidiary ledgers, advantages of this. Number 1, shows in a single account transaction affecting one customer or one creditor. Okay? 1:1. So, only for Aaron Corporation, there, in one single record. Book. This is a book. This is a book. Record book. Okay? And another one for Branded Corporated. Another one. Another one for Kero. So, free the general ledger of excessive details. Because if not, you have to what? To put the names of the posted transaction in the ledger by several explanatory note. Okay? And number 3, help locate errors in individual accounts. Very easy to locate errors by just what? The reference. It is referred to this, it is referred to this. Okay? And number 4, make possible a division of labor. So there are several staff who is assigned for one subsidiary. Okay? So could, if there are 100 subsidiaries, then you can divide it into 5 person. Then they will record for 20 subsidiaries each. Okay, something like that. So let us look into the recording. How do we record this in our accounting books? Sales journal, cash receipts journal, purchases journal, cash payments journal, general journal. So we still have general journal. But we can what? Have separate this journal, like sales journal. Used for what? All sales of merchandise on account. Cash receipts journal. Used for all cash received, including cash sales. Okay, cash receipt. So all the cash transaction received. Okay? Different from sales journal. Purchases journal. Used for the purchases of merchandise on account. Okay? Cash payments journal. All cash paid. So in this case, you have a very good way of going back. If you go back and what? Searching for something. For example, after 5 years. It's very easy to search if you have this one. So if you only operate in 1 year, the company is closed after 1 year, then you don't need any of this. It's a waste of time. It's a waste of time because you have to what? Monitor several things. You are monitoring, you are filing 5 journals instead of 1. And what? For what? This is more on in the future, no? To keep track easily. If a transaction cannot be recorded in a special journal, the company records it in the general journal. So, it is. Okay, question. Each of the following is a subsidiary ledger except A. Accounts receivable ledger, B. Accounts payable ledger, C. Customers ledger, D. General ledger. So, of course, the answer is letter D. So, each of the following is except. This is not a subsidiary ledger because it is general ledger. Okay. Okay, let us go to the first one, sales journal, journalizing credit sales. So under a perpetual inventory system, one entry at selling price in sales journal results in the debit to accounts, receivable, and credit to sales. Okay. Another entry at cost results in a debit to cost of goods sold in a credit to inventory. Okay, cost. Okay. Now this is how we record it. Debit account receivable, credit sale. Okay. Debit to cost of goods sold, and credit to inventory. Of course, we will credit to inventory. Okay, so we have posting. So after a journal, we have to post. What are the what? So we have what? Subsidiary ledgers. Different, just like we have shown you the different companies there. Okay, so we have what? Sales journal. Okay, so sales to different companies on account. They are on account. That's why. So we are looking at accounts receivable and accounts payable. They are on account. We don't need any details for cash, but we can also keep track of cash only transaction going in and out of the company. So we have what? Purchases and sales in cash. But here, they are on account to individual accounts, receivable, and subsidiary ledgers. So very easy to keep tracks. From sales journal, we have what? The subsidiary ledger. So we need sales journal. If there are several subsidiary, about four of them, about 10. In a real situation, there are hundreds of customers. Even us, when I work in a wholesale industry, big market, steel market, the customers are hundreds in one division, industrial market. I am in the industrial market, you know, and I am only what one of the how many? We are three in the division. Luzon, Visayas, Mindanao, something like that, or four. We are four in that division, hundreds. So for the total of us, we have what? 500. And that is wholesale. How about retail? So there are several sales involved. There are several clients involved. There are several customers involved. So you might need a sales journal and subsidiary ledger. So when we are talking of subsidiary ledger, we are not talking of subsidiary company, but the relationship still works. Subsidiary means child, parent means parent, so parent-child relationship. Same relationship with the parent holdings company and subsidiary company. But here we are talking of ledger, the record account, okay, in our company, which is what uh, separate for each and every client and customers. Advantages: one line entry for each sales transaction saves time. Only totals rather than individual entries are posted to the general ledger. A division of labor. So those are logical advantages. Now let us go to the receipts cash journal. Okay? In the cash receipts journal, companies record all receipts of cash. The posting of the cash receipts journal is similar to the posting of similar. However, these are cash transactions. Okay? So let us go. Okay, example we have here. Cash, May 7, cash sales. Okay, then May 12, cash sales. Okay, okay, so these are what recorded transactions. So cash, there are several cash transactions there. So cash receipts journal. So there are several cash debit here. Then sales discount, accounts what? Receivable, sales revenue, other accounts, cost of goods sold, inventory. So what? So we have what? Similarly, so cash. Where are they going? So general ledger. So from the journal, cash receipts journal. Very easy to monitor cash receipts journal. So and then going to the subsidiary ledger and to the general ledger. Okay. So general ledger we are just what? Total, no? Total. We have the totals. Okay. At in the subsidiary ledger, as you can see right now, general ledger, we have the totals there. Okay. So it's very easy to keep track. For example, uh, where did the Abbott sisters 10,000 receivable go to? Go to the subsidiary ledger of Abbott sisters. So 10,600 there. Okay. What date is that? May 10. So that is the Abbott sister. Accounts, that is accounts receivable. Okay. So, however, in the general ledger, we have what? Accounts receivable, 39,000. That is the total, including the 10,600 of Abbott system. Okay? So, there are plenty of accounts involved there in the accounts receivable. There are what? Four companies. Bobson, 11,000. What? Other is Carson, 7,800. Then, Daily Corporation, 9,300. So, total of 39,000. So look at the general ledger. Only accounts receivable. One account name, accounts receivable, total 39,000. So very simple. It simplifies the general journal and general ledger, but it's very easy to backtrack because we have what subsidiary ledger and special journal. Okay, cash receipts journal. How about the cash receipts? You can also look back at the cash receipts journal. So here, cash. You have cash transaction there, so you can look up. Schedule of what? Accounts receivable. Okay. You can have a total accounts receivable here. Then very easy to monitor. So here, debit, credit, general ledger, total. The subsidiary ledger, so like that, no? From different companies. And then you will total. So total you can. Very easy. This is a conceptual framework that you can use uh, and give you insight if you are going to work or analyze um, the financial accounting in a bigger company, no? A big company. So, question: we have cash sales of merchandise are recorded in the A. Cash payments journal, B. Cash receipts journal, C. General journal, D. Sales journal. So, if we have what? A big company. So where do you have to put cash sales of merchandise? Of course, let us put this in cash receipts journal because this is cash sales. So we receive cash. Okay. Okay. So which of the following is not one of the credit columns in the cash receipts journal? The credit side of the cash. So other accounts, B accounts uh, what? Payable, and C accounts receivable, D sales. So I think this is accounts payable. Accounts payable is not one of the credit columns in cash receipts. Okay, so purchases journal. What about it? It's another special journal. Uh, you purchase, therefore you pay cash or pay on account. Okay. So it's either way. You have what? Another subsidiary ledger for those creditors. This time they are not clients, but they are creditors. Okay. In the purchases journal, companies record all purchases of merchandise on account. Okay, so we have several purchases here. Okay, purchases or accounts payable. Okay, posting, how to post it. So we have the journal. From the journal, we have to post. So 63,900. The general ledger, we have inventory 63,000. Accounts payable 63,000. The total. So because we have what? Special purchases journal. Question: all of the following are advantages of using subsidiary ledgers except A. Show transaction affecting one customer or one creditor in a single account. B. Free the general ledger of excessive details. C. Eliminate errors. D. Make possible a division of labor. Except what is the not? What is not an advantages in so this is eliminate errors in individual accounts. Still, we can have individual accounts error, but it will lessen. Cash payments journal, posting cash payments journal to accounts payable, subsidiary ledger. So in cash payments, so from our purchases, cash payments journal, companies record all disbursement of cash. So wherein cash is released. No? So cash is received, cash receipt, cash receipt, cash receipt, cash receipt, cash receipt, cash released, cash payment. So you have opposite uh, ways there. No? So this is companies record all disbursements of cash. So take a look. For example, you have what? Payable of what? For example, Favor and Son. How much? 6,900. Okay, Favor and Son. 6,900. That is a detail, but in our cash payments journal, if you total 42,000, 42,000 will be reflected in our uh, different. So, so for example, here, uh, different payable 42,000 there. Okay, so for the payable alone, 42,000. Okay, so you can see the 42,000 is the total payable, wherein it includes 6,900. 6,900 is a subsidiary ledger. You can put it in the subsidiary ledger from the previous page here. Oh, and Paper and Son, 6,900. There. Okay, so you have Credit purchases of equipment or supplies other than merchandise are recorded in the A. Cash payments journal, B. Cash receipts journal, C. General journal, D. Purchases journal. Credit purchases. So that is what? Accounts payable. So what can you use in order to record that merchandise? Okay, of course, that is general journal. Okay. Cash payments of merchandise are recorded in the A. Cash payments journal, B. Cash receipts journal, C. General journal, D. Purchases journal. So cash payments. So credit purchases, general journal, cash payments. How about cash? That is cash payments journal. Okay. So effects of special journals on general journal. What can you say about this? Special journals substantially reduce the number of entries that companies make in journal or in their general journal. Only transactions that cannot be entered in the special journal are recorded in the general journal. If we cannot enter it in a special journal, use the general journal instead. Okay? So our legal records now composed of general journal and special journals. Okay? Correcting, adjusting, and closing entries are made in the general journal because that involves the totals, all of the totals. Special journals are actually details. These are details specific to clients and creditors. So when you are talking about cash, accounts receivable, accounts payable, purchases, in the general journal and the general ledger, you need too much detail. Okay? If you are a company with only 5 clients and 1 creditor, no need to have special. Put everything in the general journal and general ledger. So again, this is a good discussion about subsidiary and subsidiary ledgers and special journals. Again, this is Dr. AP preaching engineering for nation building.